Housing could crash. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. I'd like to have a look at this analysis from ABC News sent to me by a viewer, discussing the potential for a recession in the housing market. And then there's another article come out today from other spruikers saying how it's all going up and going to be rosy. It's just funny how you get these different sides of the story. So grab your stein, add your schnapps or rum, and let's have a look. Housing market could still see a major recession to come as the pandemic ravages the economy. No, as the state-imposed lockdowns ravage the economy. That's the thing, guys. That's what you have to realize. In ordinary times, they're inseparable, but not now. A spectacular bounce on the stock market since March, courtesy of the trillions of dollars being showered over the developed world by central banks and governments in their efforts to starve off the worst recession, hasn't been replicated in property, at least not here. And that's a good point. There's some concerns that property would shoot up because of just money flooding the market. Money flooding the market. And, we'll look at it right now at the time of recording. You can see I'm keeping my eye on gold today. Wonder if it'll break 2,000. Wouldn't that be interesting? We'll have to see what happens. And we can see here, the ASX 200 is pre-trading under 6,000 at 59.28. The US is going all over the place. Like, you still got Nasdaq over 10,000. I mean, all-time highs. Crazy. So, while the dire predictions of dramatic plunges in housing values so far has failed to materialize, even relatively conservative forecasters maintain that we have yet to see the impact of the recession on housing. We have yet to see the impact of the recession in the economy at the whole. You've got JobKeeper artificially keeping people employed. You've got banks giving mortgage holidays until March. Giving mortgage holidays until March. This isn't a normal thing. This isn't a normal thing. The Morrison government effectively put the handbrake on a potential savage housing market wipeout with its income support programs and by cajoling the banks into giving relief to landlords and mortgage holders on repayments. See, this is the problem with the interventionist system. Future generations are going to bear the burden of this. They're not going to be able to afford housing, and they're going to be bearing the burden of it. So even if you inherit a house and get all the value of it, it's all make-believe, because you're going to be taxed to the hilt to offset that. Anyway, you gotta love it, don't you? You gotta love it. We're always cop it in the end, but it cannot hold back the tide forever. If unemployment levels remain elevated for longer than anticipated, or even along the same pattern as the last recession, large number of property investors could be forced to start selling. Owner-occupiers will come next. And this is the thing. When people are talking about now's a good time to buy, you want to wait for the forced sales. I know it sounds tough. I know it sounds mean, but you want to wait for the forced sales, guys. So that's because banks have a legal obligation to recognize and report bad and doubtful debts in their accounts. It's worth noting, too, that those who have asked for debt relief aren't getting a free ride. They're racking up interest debts that are being capitalized into their loans. When the holiday ends, they'll owe more than they did to start. Their repayments are going to go up. I think we read somewhere like 100, 150 or something a month, 130 bucks, over 100 a month in additional repayments. So 25 a week. And that's going to affect your quality of life, guys. It's a small amount, but it will affect it. It will affect it. It'll take you longer to repay it. Some of these mortgages that people have are just a noose around their neck, are terrifying to me. Really are. They're racking up interest debts that are being capitalized in their loans. Yep, we've read that. More than 800,000 Australians took up the offer to defer loan repayments on housing, business and personal loans. When the job layoffs began in earnest in March and faced with a crisis when the deferral schemes were due to end next month, those schemes have been extended. On top of that, as of a fortnight ago, almost $28 billion have been withdrawn from superannuation accounts, with a large proportion flowing into mortgage offset accounts, which could cushion the blow from any housing downturn. Both developments, however, point to a fair extent of household anxiety over the ability to repay, and the ANZ already has warned that some homeowners may not make it, warning some will have to consider selling in the next few months. And this is why I suspect we've got the banks being all nice and touchy-feely and extending these mortgage holidays, so they want to have a slow trickle of property coming onto the market. They don't want their assets to fall, their assets which are our houses. So why the government is desperate to avoid a downturn? Because, well, I'd say we've had it so good for so long, people probably couldn't handle a recession. Nowhere is real estate more fundamental to the health of the economy than here. Yeah, and that's the problem right there. What Ian's pointed out, that is the problem. We're property-obsessed civilization. All of our innovation, all of our entrepreneurs just go to property. Because there's less risk, there's less hassle. You can use it to offset your tax. Look at all, you go to these property spooker, these events, these get rich quick or get rich slow things, and they're all talking about using property to mitigate tax, buying one here, offsetting here, doing all these things. That's not innovation, guys. That's accounting. That's the problem when you have such a highly taxed society. Stock market crashes can really hurt. They reduce wealth and hurt spending. But in a property-obsessed nation like ours, a serious downturn in property prices could be significantly worse, particularly since a large proportion of our economy is geared towards residential construction. Soaring values since the early 1990s have seen our banks transform themselves into glorified building societies. Yeah, well, yep. The more housing boomed, the more they lent. The more they lent, the faster prices rose. It was like a perpetual motion money machine. And remember, property always goes up, guys. Except when it doesn't. Except when it doesn't. And we're going to start seeing that manifest. It's culminated in record levels of household debt of nearly 200% of income and a banking sector that is hugely exposed to real estate. Around 80% of mortgages have a loan with one of the big four banks. That's why the government has been so keen to have the banks extend loan relief, in hopes that it could tide the jobless over until a recovery was well underway. Most recessions are sparked by some kind of financial crisis, a credit shortage, a sharp hike in interest rates, or the bursting of a financial bubble such as overpriced housing. This one was sparked by a health crisis that has led to mass unemployment, but it could easily loop back around and create a financial crisis, making the entire problem so much worse. And that's what I suspect will happen. That's what a lot of people suspect will happen. Because we've got a bubble here, guys. Our property's a bubble here in Australia. Isn't that accepted? Is it just me, or is that's accepted as orthodox opinion now? Let me know if it isn't. I mean, you've got the spruikers, but they've all got vested interest. All these people that come on these shows, they've got, your property will go up, guaranteed, and then you look into their background, and their entire career and their entire identity is built on property. Can you trust it? Can you trust them? Housing demand is in the dumps. Only a few months back, normally sober commentators were predicting a housing market crash of up to 30%. Even the Commonwealth Bank of Australia's home loan provider penciled in a downturn of 32%, and then we got magically Home Builder. But what are the executives at CommBank doing? They're selling. While the only fundamental change since then has been a deterioration in the US economy, where the pandemic now is out of control and jobless figures are back on the rise, and the worrying outbreak in Victoria, an air of optimism has settled over our economic prospects. How has an air of optimism? What about the tensions between China and India? What about the tensions in the South China Sea? And they're our biggest export destination, huge source of our international students, huge source of migration. Tourism. That's non-existent. But okay, there's optimism. Okay, I guess there was another article being optimistic. Maybe the problem is the media I'm exposing myself to, but then again, I'm exposing myself to the more optimistic ones. So, what's the people I'm talking to in construction? They're getting quiet. Everyone's trying to tender for work. This is the danger, guys, of social media and consuming this. You could fall into an echo chamber, and I'm trying to ensure that I don't fall into that trap. I'm trying to understand what's going on here, but the more I'm going, into the news and looking at these different things and being critical of them, the more skeptical I am of what I'm hearing. That it's all good, it's going to go good, when unemployment is just shooting up, guys. unemployment is shooting up. They're supporting people. You're getting mortgage holidays. I could never have even imagined that. When we were going through tough times in our business, really tough times, I still had to make the repayments. Frankly, I didn't even think about the prospect of asking for a holiday from the bank. I just sold stuff to get rid of all of the little debts. Everything. That's what you do. But then we're seeing other articles of professionals, project managers, professional couples who are depending on the mortgage holidays to stay in their home. So they've got no reserve, but we're in a culture now where you're not even encouraged to have a reserve. The welfare state that we have, it's geared up to punish you if you've had a reserve. So the government takes taxes off you your whole life, you're under the impression that, okay, if time gets tough, they'll support me. No, they won't. They'll only be if it gets really, really tough. Really tough. Which creates, I think that needs to be hammered home to people just to realize, you want to avoid falling into that trap whenever you can. So let's have a look, which is kind of hard when the government shuts everything down. Since late last week, ratings agency S&P predicted a 10% drop in our housing prices nationally as the pandemic numbers gathered pace in Victoria. We think Sydney and Melbourne are two markets that are likely to drop by more than 10%, but Melbourne is weaker as population growth tumbles, it said. That's a heroic underestimate, for it highlights the second big hit to housing demand. The first, obviously, is rising unemployment, and the second is a drop in population growth. Immigration accounts for about 64% of our population growth, and population growth fuels demand for housing. All those extra people have to live somewhere, which is why housing construction is so important to the economy, and which is why there is an incentive to bring people over. And the problem is, what's never accounted for in a lot of the economic modeling is the cultural impacts. The cultural impacts and the delayed ability to integrate and the effect that can have on the economic capacity of people to contribute. I looked at an article years ago when I actually studied some economics at university, and the net impact of immigrants coming to a country is slightly positive, because they contribute more than they take away. But that's all based on cultural compatibility. We'll have to see how it changes. So with our borders closed, however, annual immigration is set to plummet from 232,000 2 years ago to just 31,000 this financial year. That's the lowest population growth in a century. And those incredible weak numbers are based upon a reopening of our international borders in January, which now seems highly unlikely. Do you expect that to happen, guys? Let us know in the comments. But wait, there's a third weight on demand. Housing credit numbers released last week saw loan growth collapse to just 3.1%, the lowest in around half a century. See, this is not a normal recession. This is going to be a prolonged recession. We may face a depression. I know there's no technical term for a depression, and I would argue we have been in a depression since the GFC. Our economic growth has been below trend since 2008, if you look at it on a per capita basis. That's why quality of life is getting worse for a lot of people. Not only that, investors have completely abandoned the housing market, which, given the minimal chance of capital gains coupled with declining rents, isn't surprising. So the problem with supply. If only you could turn off the tap. Unfortunately, construction is a medium to long-term business, and once you're underway, there's no turning back. What happens is that there are delayed reactions, which economists call lags. Right now, there's quite a bit of construction underway from projects commissioned before the pandemic hit, and which will hit the market just as demand wanes. That's another thing to wait on if you're looking at jumping in. If you want to buy, wait. Patience is a virtue. Don't worry, guys. There's going to be a shit ton of property available soon. Okay? Don't worry. Don't worry. There's always going to be something else. I mean, the FOMO with property is like the first love someone has. You fall in love, and you're so heartbroken that you make stupid decisions, and you react like a nutter. And it's about learning and growing up. Some people have to be heartbroken with property to realize there's going to be a better option that comes along later. So that's going to weigh on prices, and that then leads to other problems. According to the latest numbers released last week, building approvals in June dropped almost 5%, pushing the annual decline to almost 16%. Both apartments and houses were down. And I will bring I'll bring up this chart. You can see that here, guys. I mean, it's going to be tough. It's a normal reaction to a weak market, but the extent is extraordinary. The construction downturn will reduce supply, which eventually will support housing prices, but in the meantime, it could be tough going for those in construction. You also have to realize that, sure, it will maybe support housing, but then you're going to have people, forced sales coming from those in the construction industry that have got nothing in the pipeline. Nothing in the pipeline, guys. The shortage of work is likely to see firms go to the wall and a big drop in demand for labor. While there will be partly offset by the recent construction stimulus, it won't be enough to pull the industry through. That will lead to even more unemployment, and that leads to further pain for housing as builders struggle to make ends meet. It all goes to highlight the yawning gap between the real world and the stock market that has become increasingly divorced. And this is the issue. This is here. The fact now that we have a situation where builders can trade while insolvent. This is why I'm scared to take advantage of home builder. Because we have to do renovation work here. Okay, we bought this house dirt cheap because it's a fixer-upper, and we have to raise it up, re-stump it, and then we can extend underneath. That's the plan. We've got a big family. We're close to Brisbane. You know, we're close to Ipswich. We're close to the Gold Coast. We've got a great location here. And, you know, Rachel was really keen. 25 grand, it could help us, you know, give us that kick. And she looked into it. We'd have to stump all the money up and we get reimbursed the 25 grand at the end. But I'm just too scared about this trading while insolvent and having a building up in the air that I can't occupy. That's what has me worried. So what am I doing? We're going to wait, and I'm going to paint the whole thing bit by bit and just, you know, do all the repairs and maintenance work that we can. We've got to replace some gutters, you know, paint it. We've got to remodel the bathroom, so I've got to move stuff around in there. And we'll do that now while we have time. You know. But that's the warning. That's what has me worried. This right here, and it's not mentioned enough. So guys, there we have it. There we have it. You know, more predictions of a property, well, housing market crash. What do you think? What do you reckon? Let us know your thoughts and opinions in the comments down below. Thank you all for watching. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve, or Kucoin. You can buy a merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. I'll see you next time.